All right, so it's Friday, 11:26 p.m., June 21st, week 3. This is going to be for week 4, though, of June, and I'm going to put this in the week 4 document. I'm doing my homework for trading. I watched the podcast for MBB part 2, and I took a lot of notes. I'm going to apply what he talked about. One of those things is basically high and low for the week and just getting a better feel for like the weekly profiles, back testing, 2 years of data, SPX. That's what I'm doing here. That's one of my homeworks. But again, I need to finish the first one, which is 3 reasons on how we can done better on our recent trades for this month, and that's kind of what I'm doing here. And I have some side notes that I went through and something I'm still experimenting with, and I just need to collect more data, so I need to back test a little bit more here, just seeing where the high and low is forming. And then eventually I'm going to do that for the day, so like the high and low of the day for like sessions. Forex is going to be kill zones. For the indices is going to be mainly just like New York AM, New York lunch, or New York PM, because I already know, or maybe London, who knows. Majority of the time is usually like in the New York session for the indices. So again, it's going to be these markets right here, the red ones. I was going to do these right here, extras ones, but I usually just trade these right here, if I'm being truly honest. Like I usually trade these. I don't usually trade them, these over here, but if I usually do, again, they're like in confluence with Dixie, or pretty much like Dixie, and then Euro AED and GBP USD are usually like super in confluence together. All right, so I'm back testing real quick on this little trade that I'm kind of back testing some trades here, because I want to see what I could have done better for the trades that I've taken this week. Actually, from like yesterday, Thursday, again, we had a buy side imbalance here formed. Don't mind the other PD raise. I'm looking at the 1 hour, like, wait, I didn't have a 1 hour confluence. We had a 1 hour order block form. Of course, the bodies are like more precise. You can use the bodies, they're more precise. I've never really used the wicks, in my opinions, for breakers, for anything in general, for like order blocks, breakers. I never really used the wicks. I'm really considering using the wick because it gives you more of a zone and a definition, especially on the higher time frame. The higher time frame is a lot better in my opinion. And then on the 15-minute time frame here, inversion, fair value gap form. And when did this fair value gap get inverse? As soon as we close, we enter right here. We wait for this candle right here. We can enter right here, but again, you want to wait for the closure. So then you open on this candle, then you look for a trade idea here, and then suppose you go down to the 1 minute time frame. And I was thinking, like, I need more than, of course, so this is one of the side notes I had earlier, which was having 3 PD arrays on at least 3 of these time frames, which is going to be the weekly, daily, 4 hour, and the 1 hour, brings a super high quality setup. But nonetheless, again, I'm still doing my note, 3 reasons on how I could have been better on the trade. And then basically that was one side note, basically 3 PD arrays. I might have to consider the 15, honestly. I just might have to consider it. Who knows? Week 3, basically. Week 3, you can see we took so many trades on Thursday and Friday. We took too many. But if we go over here to my other side of the calendar, which is going to be right here in June, the charting, you can see we basically only charted for 1 day out of the whole week. 1 day out of the whole week. So there's 5 days I usually chart: Sunday, Monday, Tuesday, Wednesday, and Thursday. And it's usually in the afternoon session I chart, because I wait for the the candle on the daily to close, and then I'm gonna start going chart. And I'm like, all right, this is what I want for the next day. I feel like this is kind of a reason why we were so lackluster throughout the whole week when we were taking so many trades, because we didn't have a clear definition of what we wanted. And so I feel like we were just rushing in there. We're like rushing in there, guns blazing, machine gun, We weren't being a sniper like I wanted to be. A sniper, one shot. What am I going to do? I'm going to chart every single day. Again, I do the Telegram updates and I give my commentary of what I want for the day and the week. But I feel like just charting provides so much more clarity, in my opinion, because I go down on every single time frame and I have to look at it. And I have like so much time to look at it in the afternoon. No one's rushing me. No one's doing anything. All right, guys, you can see the date. It's going to be January 26th. Basically, phase 1 is completed. And today is basically Wednesday. I believe it's Wednesday. Yep. Okay, yeah. So today's Wednesday. I passed my phase 1 with 1 trade. Yesterday I did take another good trade. I wouldn't say a good trade. It wasn't, I'm going to show you guys the trades, but it wasn't really following a model. It was more of a following the order flow. And I took another one of that, but I just cut it out because I already knew I need to be trading my model. I need to be trading with clear conviction and clear confluences and not just entering randomly. But nonetheless, I took the wins. I'm not really proud of the wins, the first one of yesterday, but today I am proud of the trade I took today. But no, today we did risk 2%, and again, we just hit this beautiful trade. It was like a 1 to 3. I just like the ones I did take today. Just clear conviction, nice, 2%. Again, I had a buffer. That's kind of why I did risk a little bit more from this trade right here, the win. I was like, all right, I'm willing to lose a little bit, and then this one too, of course. So it was a 2% buffer. I was like, I'm willing to risk 2% here because this trade looks super nice, and I have my buffer. I'm risking 1% until I have a buffer of 2% or more, and then I'm going to risk 2%, and then eventually I risk 2%, and then I take, whatever happens, basically. So a day that is very, very profitable for me that I'm seeing here is Tuesday, very, very nice. Wednesday's 50-50 here, Thursday 50-50 really, and then Friday day, again, is not really enough data. That's something I need to work on. Just a little bit of the patience. I just need to build a little bit more patience because again, I'm making these mistakes, but I need to catch myself before I even make them. So I need to work on these little red days right here from just last week, just working on that. I need to work on that. So I've been journaling. I'm about to get back into my monk mode. I'm about to start reading. So yeah, I'm just getting, this is my trading commonplace book. I've been journaling, all that. And then this one's just my regular journaling of what I feel on a day-to-day basis. And sometimes I put in trading stuff there. So I did update you guys last week. I know I did. So this, again, I just wasn't proud of it, honestly. I'm still not proud of it. I'm not proud of this one either. I'm not proud of certain trades I'm taking just because of my emotions. They get the best of me there in these certain situations, and I take them. Even if I win, I'm just still not satisfied. I'm not proud of it. From like today, I am proud of that. But again, from the gold one, I'm not proud of that. I need to fix it. I'm going to fix it very, very soon. So I don't even really count those as wins in my book. The ones that have like emojis like this one, and then of course this one is going to have an emoji soon. I'm proud of those. I'm satisfied. Again, so this is the trade from yesterday, which is going to be on Tuesday, the 25th, which is NQ. But yeah, this is the trade for NQ yesterday. It's a small, like below 2%. We had, 1 minute bearish balance price range. We made it inverse on SPX. So I thought NQ was going to catch up. So we entered without even waiting for the closure. And then you can see we retraced. My stop loss was down here at this low. And again, we're so close to reaching it. I'm not even going to lie. Right here on the 15-minute time frame, we had no 15-minute confluence. You can say what you want to say, but you can see it's a market maker buy model. I was waiting for it to be completed. On the 30-minute, this was a confluence here on the 30-minute. This BISI here, which we got retraced back up into, but the 30-minute confluence here was the 30-minute bullish balance price range. I did want us to retrace, but as soon as we opened up, we just had a little wick and then we went higher, and it just wasn't really clear in my opinion. 1 hour time frame, again, we had an internal resistance buy side balance. We tapped up into it, then we went up higher, and that's kind of what formed that market maker buy model down here. And again, I'm just waiting for it to be completed, and I just entered at the completion, and that's really it. So yeah, that's pretty much it. Again, this is the last week of June, so I'm not really expecting too much movement on the indices anymore. Again, this is the trade from earlier. This is the gold trade. I'm not really proud of it. I did journal it because again, it's a trade, it's a trade I've taken, and I have to journal every single trade, and I have to be, completely transparent with myself. So again, even if it's just like a minus 3.5 off of the commission, it was a break even. I don't care. I'm journaling every single trade, and that's really it. So on the 1 hour time frame, again, we were chasing price. We entered, then we closed. As soon as like this candle opened, 5 minute, the 15, we had a 5-minute confluence, but the 30-minute was a main confluence. But yeah, you can see we had a bearish balance price range form. We tapped up into it. We formed like a 5-minute SIBI. We retraced into it. That was going to be my entry. My stop like around here somewhere. I was aiming for like a 1 to 2, maybe a little bit more. Depending, if I was in the trade, I would have probably done something different, maybe to pass the account. Didn't let us enter because of the margin, so that was pretty unfortunate. In the 1 hour time frame, we had a 1 hour SIBI, 1 hour high. Again, I thought this was going to be inverse, retrace and go higher, take out this, and then tap into like a 4 hour order block, then go lower maybe, but it never happened, and we're just showing bearish prices here. And again, we're just moving very, very heavy here. Clean market movement, no retracements, no retracement swings, only this one right here, which was like with the 5-minute SIBI, and then we just went down lower. So yeah, pretty clean, pretty nice movement, very, very nice. We just weren't able to capitalize or enter. Pretty good because we were able to take this right here. Our model presented here, we had the permanent reversal X standard deviation, lower time frame model. Yeah, we had a 3-minute invert. This is on the 2-minute. I put it on the 2-minute. God damn it, I put that on the wrong time frame right here. I put it on the 2-minute. But that's kind of like, why is it looking? But yeah, on the 3-minute here formed a lot more differently, and yeah, we had an inversion, we had the breaker form, and then we had the, yeah, pretty much that's really it. We entered here at the 3-minute. Again, the 2-minute looks pretty clean too, nicely. So 2-minute fair value gap made it inverse right here. You could have entered there. There's no external resistance here on the monthly, monthly highs just being taken out and just going higher. It's like the indices basically. So I had to use standard deviations, but then I realized, we're probably gonna take a while to get up there, so I'd rather just take my bread and butter. 15-minute time frame here, we had a 15-minute buy side and balance form, and then yeah, you could probably take another long, but again, we had a 15-minute BISI down here, which was our main key confluence. 1 hour time frame, 1 hour BISI, again, a main key confluence here. I guess this was the main confluence with the 1 hour one, and yeah, that's really it. We didn't have a daily or 4-hour confluence. We just knew order flow was being bullish, and we had no highs to target or nothing, so we just knew the market would continue higher if we saw a nice price movement, nice order flow on the lower time frame and the intermediate term time frame, which is the 1 hour. All right, guys, it's gonna be Thursday's update. It's 6:27 right now, and I haven't updated you guys about the funded account journey. I'm gonna update you guys basically what's going on. Tomorrow is gonna be the last day for the trading day, or the trading week. I might update you guys tomorrow if we take something, but if we don't, then of course this is probably going to be the final update. Again, I'm giving out my market reviews and my bias for what's going on throughout the week, and like, this is completely free. I'm not charging anything. Anybody can join, anybody can view this. You can capitalize upon what I'm watching and how I'm watching it. And like, again, today on USD JPY, I basically didn't really call this, I called it out, but I showed you guys what I was anticipating, and you can see pretty much later on it kind of happened. Pretty sloppy in my opinion, but it's nonetheless, it still happened, and eventually probably went up higher. Last phase 2 on my other 10k and then my 15 wasn't really smoothly, because again, we didn't have our risk management in check. We didn't have our system in check, and I'm glad I lost because I learned so much from those mistakes, and I was able to refine my system a lot more, and I just probably wouldn't be in a position I am right now if I I wasn't able to do that if I just didn't lose. So I think it was all meant to be. All right, so you can't really see it here, but I don't know if I can put it on today. So yeah, today you can see we're at just $100, a little $100, and then we have minimum trading days, 2 more days, I guess. I really didn't see this. I didn't even see this coming, in my opinion. I'm pretty shocked. Usually they don't have minimum trading days. Again, first trade, risking 1%, hit a 1 to 2 today on NQ, and that was really it. If I see something tomorrow again, I'll take it, but this is probably the last trade of the week, because again, it's just been, that's like 9% in a week. I'm just really trying to chill and take it easy. But if I'm still hot and I see something, of course, taking it. And again, since we have a little buffer, I might risk 2% and just aim for like a 1 to 2.5, if not 1 to 1, and then yeah, probably 1 to 2 just about pass the account, taking 1 trade a day. And then today in Q, the 2% win, 4-hour time frame, external resistance, external ranges right here, external buy side, external sell side here, and then pretty much we're just waiting for the market to go higher, because we're bouncing off of the daily PDA rate, which is the daily buy side imbalance, and then this is the daily sell side imbalance, which I want us to get above. Of course, since we have a weekly buy side imbalance, we are respecting the 1-hour time frame again, just a lot stronger. We were above this, while ES I think was still below it. So I think NQ was a lot favorable to me, in my opinion, since we did get above this, and then this high up here was our target. And then on the 15-minute time frame, we created the external range on the 1 hour, but again, I wanted us to retrace and go into a discount, which we kind of did here, but I knew we're not going to retrace into this because it's way too deep into a discount. And if the market is already above the 1 hour bearish balance price range and it makes it bullish, you know, if we likely tap into that, we're likely to go higher. And that's what happened here, right here on this wick right here for the 15 right here. We tapped up into it and then we went up higher, and so that made me drop on the 1 minute time frame. And then we formed a sell side imbalance and then a buy side imbalance. I was again just waiting for one to get respected while the other one gets disrespected. And of course my bias was bullish. I waited for the BSC to get respected, and then eventually the SIBI to get inverse, which happened here. And then eventually we waited for the closure, and then the candle opened, went up a little bit higher, and then eventually I entered top down here. My original stop was down here, but again, it just, the market entry, I put minus 1%, basically like my original stop loss, and it was down here now. Of course, you know, I wasn't really against that since we did form this order block. I'm not really against that anyways. Again, so we're up on the account now. All I'm gonna do is really just be patient, not gonna really try to do anything. Now we're on phase 2. You know, I'm just trying to maintain a cool mindset, because last, you know, couple of funded accounts, phase 2 has not been so great in my opinion. I'm just trying to keep it, you know, very level-headed, you know, and just trying to continue to do what I'm doing, and just probably, you know, journal and try to find some more improvements to make to my system, and continue to just refine it little by little to see the small incremental changes to, you know, have a big drastic change. And so yeah, that's pretty much really it, honestly. I'll probably up to you guys next week, but nonetheless, if we do see something tomorrow and we take it tomorrow, I'm not really going to try to force anything. Again, just 2%. Last week, again, I learned from my mistakes. I'm going to continue to review them even if I didn't make the same mistakes. I just don't want them to repeat. I don't want history to repeat itself, so I will have to constantly review, constantly see what I can do better every single weekend. So yeah, that's really it. Peace.